Many critics of Tesla have started to lose hope for the stock price's future since it has failed to rise significantly in the past and as the competition in the EV market becomes more formidable. What if we told you, nevertheless, that obtaining 45 Tesla shares at this very moment could hold the secret to financial independence down the road? This video has the answer you're looking for, based on certain recent developments and occurrences at Tesla, which we will discuss in today's video. Investing in Tesla stock may enable you to retire early and ensure a stable financial future. If you're new here, ring that bell to enable notifications and don't forget to subscribe before we dive in. You won't miss any of our most recent updates on the price of Tesla's shares that way. Let's start the video now so we don't waste any more time. We've learned that retirement is relative over time. While some people aim to live as long as possible, others desire to retire young. In other news, it's thought that $1.5 million should be plenty for the average person to live well in retirement. Even though this seems like a big amount, other people would think it's a terrible lot of money to accept. Whichever side you are on, there's no denying that retirement and how you approach it are essentially mathematical calculations. Speaking of figures, let's start with what experts have to say about the prospects for Tesla stock and the figures we have been told to anticipate. It's important to note that despite the fact that some experts continue to be pessimistic about Tesla's stock price, others have a more bullish outlook after taking a longer view. Despite the stock's recent performance, a Wall Street investor believes that Tesla might conclude the year at a price of about $900 or $950. Additionally, they predict that anything below $1,000 in Tesla's stock price would have entirely vanished by 2023 and 2024. You might be surprised to learn how bullish analysts are about Tesla stock's future when you consider the stock price's 5-year prediction. By June 2027, these analysts predict that Tesla's stock will have increased by a little over $2,500. It's safe to conclude that Tesla might actually reach and beyond the $3,000 barrier based on what all of these experts have to say regarding the price of Tesla stock over the next 5 years. Even if they are successful in achieving what analysts predict, investors will profit handsomely given the present price of Tesla shares. For instance, you would need to pay a little over $36,000 in total if you were to buy 45 shares of Tesla at the present price, which is over $800. This is where things start to get interesting. Based on what analysts have said thus far, your 45 shares of Tesla stock may be worth more than $135,000 after just 5 to 8 years of ownership. That nearly $100,000 profit margin is enormous. In conclusion, merely acquiring as much Tesla stock as you can will raise your chances of retiring and maintaining a stable financial situation. In addition, you have some leverage with 45 shares. If the price starts to rise above previous records, you can still sell and earn handsomely. If the price drops, you can always buy more. Investing in Tesla shares over the next 15 to 20 years could change your life, depending on your age and remaining years of active duty. With the ideas the corporation and its CEO have been implementing, we can only anticipate seeing even more bizarre things as technology advances. Having said that, let's examine a few upcoming initiatives from the corporation that could have a significant impact on the price of Tesla's shares. First off, Tesla is investing significantly more in scaling up manufacturing in order to fulfill the strong demand for its already available automobiles and to fulfill its brand promise to boost production this year. Tesla's capital expenditure is now expected to increase from a prediction of between $5 and $7 billion, issued in April 2022, to between $6 and $8 billion based on a new securities filing by the firm, according to a recent release from the business. It's possible that Tesla is spending an additional $8 billion to expand the size and output of its plants, create new environmentally friendly batteries, and finance other initiatives. Speaking about factories, the majority of people think that the Tesla gigafactories in Berlin and Texas may be the primary target of this new investment. At one point, Musk called them money furnaces and said the company was losing a lot of money on them while receiving little in return. In light of this, it makes financial sense for the corporation to invest as much as it can to increase productivity in these two enormous factories in order to optimize earnings. In the long run, the advantages of such a large production investment can truly be a major game changer for the business. First, increased output from all of its factories will contribute to a decrease in the price per vehicle, meaning that every sale will bring in more revenue for the corporation. The fact that the business is still working on additional products for the upcoming years should also be taken into account. All of the delays that have been encountered thus far may be crossed off the list of concerns once the production side is put on lockdown. Without a question, Tesla's significant investment in increasing production is a move that will have a lasting positive impact on the company's profitability. Tesla will greatly increase its earnings as soon as its production issues are resolved, which will raise the stock price. By the time these advantages become apparent, everyone who still has at least 45 Tesla shares could become extremely wealthy. While we're talking about Tesla's electric cars, let's also discuss the potential V4 supercharger that Tesla might be developing. Although Tesla's plans for the V4 superchargers have not been made public, leaked project schematics suggest that the next superchargers may have a completely different design. More than just a difference in perspective, most people think that this design modification could allow for a combined charging system, enabling EV companies to utilize Tesla's already extraordinarily effective network of charging stations. The CCS assistance feature is currently operational in 16 European nations, and the system has yielded significant benefits for the organization. More businesses will have to comply with the Tesla system with the expected arrival of new superchargers in the U.S., which will increase revenue for the firm and broaden its appeal beyond just electric vehicles. The strategy of creating an effective system first and allowing others to benefit from it is a great one, and it will eventually pay off for the business by increasing its stock price. This specific topic is significant because it demonstrates how Tesla is always trying to think long-term when making innovations rather than just thinking about how its innovations will help them now. In order to achieve financial independence upon retirement, it is advisable to take a long-term approach. Maybe the secret to making it happen is to hold 45 or more Tesla shares for the next few years, maybe 10 to 15 years. And last, before we leave, you may want to keep an eye out for Tesla in the energy sector as well. Tesla introduced the massive Megapack project in April 2022, which combined a solar farm with 360 megawatt-hours of energy storage capacity. This configuration, according to Tesla, could power 60,000 households. Together with Erevan, this project was finished, and Erevan is progressively becoming Tesla's largest energy storage partner. More than 500,000 solar panels were used in this Boulder City, Nevada project. Tesla supported the installation of these panels with 360 megawatt-hours of Megapacks, which will aid in utilizing all of the solar energy produced. According to Tesla, the project will provide 60,000 houses with 500 megawatt-hours of electricity annually, negating 400,000 tons of carbon dioxide emissions. Just one of the numerous projects being planned with Erevan, this has grown to be one of Tesla's biggest Megapack projects globally. It's interesting to note that Tesla has already begun construction on a new megafactory in California in order to increase Megapack output. Tesla might establish a monopoly in the sustainable energy sector before any kind of competition ever gets a chance to start at this rate of development and production. We anticipate astounding outcomes from Tesla's entry into the energy sector, much as it achieved with EVs. Just for a moment, consider investing $36,000 to $37,000 in shares today and seeing that amount rise by 10 or 20 times over the course of the following several years. Without a doubt, the future is bright for Tesla's stock, but remember that investing has risk and there are no assurances that the price of a stock will rise. Exercise caution, conduct independent research, and get assistance from a financial counselor if necessary. If you held Tesla stock for the next few years, do you believe you could retire? Tell us what you believe will happen to the stock price by leaving a comment below. Remember to subscribe and enable post alerts for additional videos while you're here. We'll see you in the following one. Music.